being here. What a great way of kicking off 2024. From our side, I'm really, really pleased. We've had so many different events under the belt. This particular topic today is something that we've been pushing for, or we've been getting pushed for a long time. So very excited to get this started. And you know, at the end of the day, I think it just came down to not knowing enough about it. So we wanted to take this high-level discussion to the next level with some amazing, amazing people from our community. We've got Laura Cadman, who is an investor, a conduit between founders and investors with a particular interest in AI and blockchain. We've got Mann Matharu, who is a serial entrepreneur and specifically has a phenomenal startup right now in the crypto space in the UK. He'll talk about that more. And finally, Sin Jin, who is burning literally the midnight oil in Singapore, signing in from there, a fellow Canadian and alma mater. Actually, we have the same alma mater too. Really happy to have you on board, talking about the crypto industry, the gaming industry from its nascent stages, and you know how you were a very instrumental part in so many different companies that you were with in launching them globally and fundraising with them. So I want to kick off with Sin Jin to continue with your intro, and we'll get started.
Yeah, so I'm Korean, but I was born in Montreal, Quebec. In my high school years in Toronto, and went to University of Toronto as well. I was a Korean government technology analyst negotiator. I negotiated the first R&D relationship between Korea and the EU. It's my claim to fame in the government. I realized that the public sector was moving too slow for me after doing an 8-month due diligence on defense systems, and I decided to go with Boeing rather than this Israeli supplier, which was quite a bit better. Went into PricewaterhouseCoopers, regulatory consultant there, ended up at PokerStars. At the time was the biggest poker online gaming company. Back in 2007, I legalized poker in Macau. I was a core executive. After that, I went off to FinTech, and I sold my company to Alibaba Alipay back in 2017. Moved to New York City. My wife spent all of her money in New York City, but she was happy to do so. And I'm back in Singapore the last, 6 months now. I had met Deborah back in New York at another investor event. Yeah, and I've been in crypto since 2017, and I opened up my own Web3 gaming studio, video game studio, a couple of years ago. And in the particular space, I'm a fairly known builder as a game designer. They're working with all the major AAA titles out in the States. Great to meet everybody. Thank you for inviting me.
Amazing. Thank you for being here, Sin Jin, and really appreciate you signing in for so late. Laura, next up.
Thank you. Thanks, Kari. Lovely to meet everyone. I've met a few of you through Kari's dinners, but lovely to meet more of you. My background is really in investment banking, Bear Stearns, Merrill Lynch, trading and equity sales, principally in capital markets. I then was involved in the entertainment space for a few years, and I lived in Los Angeles. And then I came back to London, got involved in fintech, did some studies at Said Business School, set up a fintech, which has turned into a consultancy. And I work alongside really startups as well as VC funds, and I help their startups grow and create partnerships and develop opportunities. So lovely to meet you all.
Amazing. Off to you, Mann.
Great. Thank you, Kari. Thank you, everyone. It's a pleasure to be here. My name is Mann. I'm the founder and CEO of a startup in the UK, primarily London-based, called QI Digital. And essentially, what we do is we develop tooling. It makes it possible for crypto to be accepted as almost like a payment method. So going back to the original Bitcoin white paper to be this electronic kind of cash system, I fell in love with that white paper. And I know more recently it's become like a digital asset class. So lots of people investing in cryptocurrencies like Bitcoin. But I personally am a Bitcoin maximalist, so we're doing some engineering around Bitcoin and its core blockchain. My past experience is probably about 25 years of entrepreneurship. I went to college and university in London, but then I quickly went entrepreneur, building software, building applications and e-commerce solutions, and then breaking them, waiting almost all night for one page or a piece of code to be uploaded because of the internet connectivity back in 1999. It's a pleasure to be here and looking forward to having the discussion all around, I believe, the evolution of the internet, how far we've come over the last kind of 20 years, and then tying that back into what does money look like today.
Man, while you're on that topic, can you just contextualize and set the stage for the discussion today and get the ball rolling?
The idea is that let's conversation around the evolution of the internet. Like, if it wasn't for the internet, would such big tech be so accessible to us? You know, we're going to touch things like blockchain, AI, and obviously crypto. More specifically in crypto, the essence of Web3. So if I can just tell you a quick story, and I think I touched upon it earlier, about what did Web 1 look like in 1999. We didn't call it Web 1 back then. We didn't even know what it was, but it soon as the World Wide Web. A lot of it was data that used to be stored in huge servers, right? And it used to be processed data essentially. A lot of the big businesses, corporations, governments used to have these big offices that were filled with computers, probably the size of a room. What happened was it was made possible to render that information or render that data and present it on the internet, on this kind of the first essence of what decentralized technology looked like, which we know as the internet. But even the early version of the internet was very slow. So information was presented to you on screen, you can read it, and that's about it. Probably around the mid 2000s when Web 1 quickly evolved into Web 2. That was the kind of introduction of advanced search engines such as Google, social media platforms. That was the essence. So that became then a very two-way interaction type kind of model where you can communicate with people on the other side, or you can share content with each other. Not even two-way, but potentially three, four-way. And then obviously the emergence of communication tools, faster internet speeds allowed us to communicate with, WhatsApp and other chat platforms, which is a type of social media. So if you think of that as a two-way interaction or a three-way interaction, and more recently, as the evolution goes on with all things in technology, Web3 is, as I mentioned, more of an evolutionary path on that, where we can now part with value. And when we think of value, it could typically be swapping goods or services, or potentially a token, but actually paying for goods and services in a very decentralized and open manner, typically through things like cryptocurrencies or a token that sits on a blockchain, which has got some stored value in it. When we talk about Web3, my kind of interest in Web3 is more the kind of payment side of things. I'm a payments guy, and that's where my kind of history lies. But I'm sure Sin Jin would talk about other aspects of what Web3 can do. From my perspective, it is this idea of exchanging value or sharing value transmitted over the internet, when the recipient can actually receive that value. And it could be, as I say, swapping pieces of art, or swapping, exchanging goods or services, or actually swapping money and exchanging money with each other. So I hope that kind of paints a picture about some of the areas that we're going to touch upon today.
You touched on the Web 2 and Web 3, but as we transition, Sin Jin, I think this is more geared to you. How do you anticipate decentralized technologies influencing the gaming industry, in particular user experiences?
Well, I think, there's the technology and then there's the application aspect of it, right? And so for me, Web3 is really about digital ownership. So if you say that, Web 2 was about information, Web 1 was about information, Web 2 was about social networks, right? And the communities that were created, then Web 3 is about digital ownership. And so right now in Web 2, we have some forms of digital ownership, but they're gated to platforms, meaning you buy, I'm an Amazon Prime member, all my videos are on Amazon. God forbid Amazon would ever go under and I would lose all my Star Trek and, Star Wars episodes that I've bought. What these monkey JPEGs and everything else represent, these NFTs and so on and so forth, right, is really this moment where there is an ability to have ownership over digital assets. And we never really had that before. Now, it's not true ownership in the sense that there are a lot of centralized aspects of it, but it's decentralized in the sense that it's not gated to one single platform, meaning that if you have a smart contract, you have internet, you can access it and nobody will say no. If it's a public blockchain, you cannot access this blockchain. So there's been, I'm sure all of you have heard about tokenizing assets online and payments and so on and so forth, right? And what all this is really kind of leading to is really for Web3, and what it really means is the sense of ownership. Many of the early forays into crypto have been, let's tokenize assets that are real world assets to provide more liquidity. For instance, houses, rental properties, and so on and so forth, or diamonds for transparency or supply chain. But, the IBM blockchain division shut down because they were focused on supply chain. Because verification of real world assets online as an asset itself, or adding more liquidity to existing real world assets, these are not enough 10x value add. And this is where, we're at this juncture where, what is the 10x that really represents Web3? Digital assets, which have value as only digital assets because they're tradable on a secondary market. So in terms of gaming, you've heard of virtual items, and maybe some of you may still think it's very incredulous that this happens, where you have a sword, a digital sword in a game, and it's worth $1,000, right? And you trade it on eBay and so on and so forth. But these are still all very gated. In Web3 for gaming right now, we're getting to this trend where the digital assets of a game are completely owned by the users, and they can be traded on secondary markets. So let me pick a very simple game that probably every one of you have played, something like Mario Kart. Now imagine you're playing Mario Kart and you buy a Mario Kart Super Kari version, F1 version, Super Turbo, okay? Now in a normal game, as soon as you stop playing that game and that game closes, that asset is gone forever. But now I can go on the secondary market and now I can sell that anyone to anywhere in the world. And if someone wants to make a game with that digital asset because they know there's a user base that is, plus 35 with high income that wants to play this particular game, you could create a game around that because the digital asset now exists independently from the game itself. So we're very at the nascent stage of this, really, because games themselves take 2 to 4 years to build out. A AAA game may even take 6 to 7 years. GTA 6 took 10 years and $1 billion to build out. It's still happening right at this moment. But what I'd like to say for crypto, many things have evolved. We have the ETF for Bitcoin and we'll have an ETF for Ethereum quite soon, I'm sure. But for Web3 itself, we're still defining it. And I think for certain industries, it's a lot harder to define. But for Web3 gaming, basically that all the digital assets are owned by the users, that's where we're at the moment.
Laura, I know this is kind of your forte, the Web3, the AI integration, and how blockchain factors into that. Any thoughts on that? Any comments?
Web3 is huge, and to be able to integrate it with AI just makes it even more powerful. So AI itself is expected to create a global GDP of 12 trillion by 2032. And also these are companies that are going to be really dealing with solving some of the problems we really need to solve. So health, reducing our need for pharmaceuticals, retraining the brain through rewiring. So, we're not so dependent on meds, and dealing with carbon emissions and the environment. Startup I'm working alongside is doing sort of Web3 and AI, just to put it in context. So years ago, one of my first jobs was working at The Economist, traveling around the world, interviewing fund managers to find out what they were going to do, what were their interests in investing in the next year. And a publication was put together and sent out to people, and there was some interest in it. 10 years later, I was working at Merrill Lynch. They bought this publication and, they digitalized it, and it came out every quarter. And I was working with sovereign wealth funds, with huge pension funds, and they loved this product. I couldn't believe it. I was thinking, why do you want to know what everybody else is thinking? I mean, surely you should know, have a good idea of how you're going to be investing people's money. But they loved it. And we, as people, we can't help but want to know what everybody else is doing. So at the moment, I'm working with a startup called Orbu. They've got an AI predictor model that's been developed through MIT using thousands of current news feeds in conjunction with the crowd. So it's a tokenized company. So to your point, Sin Jin, on, rewarding, giving ownership to contributors, it plays to that. And its predictor model has an act 0.1% versus the S&P. And it can predict sorts of things, commodity prices, whatever. Hugely powerful, inclusive as a technology.
While you're touching up on this with some of the companies that you're working with, there is also a big focus on Africa with you. We were chatting about this earlier. I think we had about 45 people sign up from Africa. There's a big push for crypto and digital currencies in emerging markets.
From a blockchain perspective, the permanent ledger solves so many problems, particularly within land ownership disputes and property rights. Then, of course, all the fraudulent transactions. And I think particularly such an emerging environment where there's so much income inequality, if you can solve some of that income inequality, the impact it has on the general economy is huge. So, really exciting from that aspect. And then in terms of crypto, at the moment, commercial bank access in Africa is very limited. So if you're in a remote area, it's impossible. But even if you don't, it's still very poor quality. And then you're dealing with hyperinflation, corrupt governments, capital controls trapping domestic cash, and payments within banks that don't communicate with each other. So it's just none of it really works efficiently. And then with crypto, and Bitcoin, you can eliminate all of this. And of course, we've got to remember that we're talking about a population under the age of 35 of 1 billion people. So at the moment, only about 40% of under 35s have got access to mobiles with internet and infrastructure connectivity. But, that's going to rise, and, this is going to keep just getting bigger and bigger. And it's a lot of people.
We take this global lens, but if we were to kind of bring it back into our local economy. Man, with the introduction of crypto payments, I know this is something we're introducing in the Atlantic Society, whereby we can start taking membership fees through crypto now. We're in the process of, I guess you guys are on the process of onboarding us. Could you tell us a little bit more about that? See, because even for me, you had to literally break it down step by step. Like, I don't own a single digital currency. I know, and I missed this boat in such a major manner, like in such a massive way. I've missed the boat on this, right? But hey, it's never too late, I suppose, right? So hence the membership, right? Because we have so many of our members in the Middle East, Africa, Asia, especially, that want to pay membership fees through crypto. And for the last 2.5 years, it's been like, no, we're not doing this. We're not doing this. And I was just like, why fight it? It's here to stay. So now I'm jumping on the crypto bandwagon. But please break it down as to what does it mean? Because I still don't understand what it means. And I think I had to ask you like 10 times so I can convert my money into GBP. Like, I think I had to ask him like 6 times. And he was like, yes, you get it. It's up to you. It just sits in there and you can just decide whether or not you want to convert it. Please let us know, because looking through the list of people now that are in attendance, and there are quite a few business owners, and it would be amazing to kind of let them know how relatively straightforward this process is and what you can do with that.
Well, listen, it's great that you're going to be onboarding. That's awesome, right? If you think about it from different parts of the world, let's focus on the UK just for a second. Crypto payments probably most likely considered as fall in the payments world as an alternative payment method. The main rails are things like Visa, MasterCard, Apple Pay, Google Pay. But even if you look at Apple Pay and Google Pay, they're still linked to a Visa or a MasterCard, generally speaking. So what Google Pay and Apple Pay have done, or an Alipay essentially, is what they've done is a layer in front of the card scheme in order to process that transaction. So payments is just another method of making a payment. Sin Jin touched upon this earlier, that it's mainly going to be the under 35s or under 40s who primarily growing up with this kind of technology or having access to a cryptocurrency. Those are going to be the future owners of cryptocurrency. So that population is just ever increasing, as we know, right? So they grow up with crypto in their digital wallets, on their smartphones, smartwatches, or any other mobile device you can think of. From a business perspective, it's quite simple in terms of it's the same kind of onboarding process you would do when you want to accept a normal payment, because every payment provider, every payment service provider still has to do things like KYC, KYB, right? Know your customer, know your business. And it's the same in crypto, because crypto is now moving. There is more clarity around things like regulation. It's become a lot more safer in terms of, from a business perspective, for businesses to accept it. Ultimately, all the businesses do is they're not replacing the current payment methods that they accept. They're just adding another option, so that if a customer or a consumer does wish to pay with a crypto asset that they've got, it's their choice, right? You're not forcing them to do it. You're not persuading them. You're just giving them another option to pay. And that is another way of kind of retaining a new, or certainly introducing a new type of clientele or a new type of customer to your existing business. I'm a firm believer of this. Like I say, crypto has got so many use cases, but I thought with my experience in the payments world for the last 20 years, and more and more users are going to start looking for opportunities to pay with crypto, because they're either investing in crypto, obviously to invest, and hopefully it goes up depending on what crypto you invest in. If there is some asset being accumulated or wealth being accumulated in these crypto assets, you've got multiple options. What Sin Jin was saying, that you've got this kind of decentralized way, Web3, where you can pay for goods and services in the Web3 kind of world, or the metaverse. We haven't talked about the metaverse, but it's a similar kind of digital world or realm. From our angle, we're giving another option so that people can pay in the real world with using these digital assets. Just to very succinctly answer your question, yes, if a business wants to accept it, they can hold their crypto if they wish to, or they can have it converted immediately into GBP, Euro, and probably about 20 or 30 other international currencies almost at the time of their incoming transaction, or the very next day. So they'll have money, normal money if you want, in the bank.
Just what Mann had said, that, let's say that it's a cryptocurrency, something like Bitcoin or Ethereum, where there's a lot of volatility associated with that cryptocurrency. It goes up 5% or 6% or goes down 9%. That can be converted right away for a merchant. But in the crypto world, we have different types of crypto, right? Some of them are kind of asset type of store of value, like Bitcoin, but we have other things called stable coins. And stable coins like USDT, USDC, what they're done is they're backed one-to-one with either U.S. treasuries or with the currency itself. The way that they make money is that the money that they hold to back it one-to-one, they, obviously invest it into low-risk, interest-bearing instruments where, they make the money from holding it. But those basically are considered literally one-to-one to the U.S. dollar. And so individuals can have and trade those cryptocurrencies, which are on various chains. Right now in our market, why it kind of opens it up for consumers as a merchant is because some people natively hold those tokens because they are supporting the network. So where do these tokens come from? They come from people who are supporting the network security. So that we call it like either proof of work or proof of stake, where they are staking the value of the cryptocurrency to the node to validate, transactions. And so those individuals natively hold it. They didn't buy it using fiat. And they're a whole market that, could be interested in your product. Then they hold like whatever Arbitrum, or they hold, other EOS or Tezos tokens or whatnot. And you open it up to those users, especially if you're a very digitally type of industry.
You're absolutely right about the stable coins, because that will, in my opinion, really open up what e-commerce was supposed to be in the early days, right? When we talk about that, the dot-com bubble has burst, I don't think it's burst at all. I think we're still on the infancy of even that world, because I think truly global transactions. So when we think of payment service providers or these kind of payment institutions who do want to kind of go into markets, but they can't, local rails not being strong enough. Well, I think crypto, this is where I think could be a huge bridge for those kind of businesses, those kind of business models to go in and kind of start to offer new services to the merchant ecosystem, basically, whilst taking the new merchant ecosystem, which is like Web3 based or kind of meta based kind of businesses, so they can kind of handle both at the very same time, sort of thing. So I'm a big believer that we're enter this a more globalized, digitalized world, even more so. It's become, the world as we know is becoming smaller and smaller. But yeah, I think it's the payments infrastructure that needs to benefit on top of crypto.
And I can just really quickly give an example for emerging markets. So like, let's say that a user is in Brazil or so on and so forth, and using freelancer.com. Now, for us in North America, using PayPal or Zelle or something like that, it's not a big deal. The transaction fees are almost nil. Yeah. But you may not know this, but like PayPal and some other payment providers who are using credit cards and stuff like that, they charge an astounding 10-14% to some of these emerging markets. Now, for us, sending a transaction for $6 using Ethereum is ridiculous in North America. But for these individuals, getting $6 pay is actually cheaper for them to receive these transaction. And plus, it's not going through the local banking industry. Sometimes when funds are transferred to local banks, they automatically convert it if you don't have a US dollar bank account. What do they convert it at? 6 to 7% conversion rate above the market, right? And so these individuals are losing money that way as well. I was in Istanbul for a conference, and I decided to go buy some Turkish rugs because they said that it was better than everything else. I said, do I get a discount if I pay in the whatever currency? And they said, no, you get a discount if you pay in US dollars. I said, why? Because they said our currency devalued 20% that particular year and was still devaluating, right? So I pulled out my credit card. I did 2 payments, called my bank to let them through because it was coming from Turkey, Istanbul, to buy my rugs. But with cryptocurrency, what that does is democratizes also the US dollar in the sense that, the government does not have the currency controls. And I don't mean this in a negative way, but in the sense that the private industry cannot simply fleece the users for receiving in US dollars, right? And kind of bring that value down of what you've transmitted over internationally for work that was done at an international level. But because they're in a jurisdiction where, the capital controls or the general infrastructure takes money off the top, that they're getting their true value, right? And this almost creates a truly global marketplace, which is more fair for the end user. So that's one really true use case. But ironically, these stable coins are backed by US fiat dollars as well. There's a kind of double-edged thing here where the decentralized nature of it may be on the tech side, but there's still much to say about the centralized nature of ownership that backs a lot of the infrastructure here as well.
Why aren't more governments adopting this even to push tourism, to push local economies? I mean, you've just illustrated a very, very poignant use case, and you don't need to be centralized to do this, right?
Yeah, you don't need to be, but it's monetary policy. So you look at Ecuador that's adopted Bitcoin because their own monetary policy and their own peso isn't great. But then you have Argentina who says they're going to dollarize. Don't care about their monetary policy because the current monetary policy they have in Argentina is ineffective. But for somewhere like the United States, where the monetary policy makes a huge difference in terms of supply and their control over the global commodities network industries such as oil and so on and so forth, right? It's something very hard to give up. But the beautiful thing, which is a double-edged sword, is that a lot of the cryptocurrencies which have floating value values, because they have their own monetary policy of how they create supply, it can be very, very, very powerful. So in the case where you're in, for say, Ethereum, you bought it at 14 cents. Now it stands at 2,300. Where did that wealth come from? Well, the wealth didn't just come from simply people speculating on it. It's because the size of the network is supporting this network so that, it's reliable. It's there. It's on there 24/7. It will happen as it is, and no government can shut it down. But for a lot of people, and if you hear like the EU, commissioner, been very, very against crypto for most of her terms, simply because it takes away from the monetary policy ability of the EU and the United States. And so it's something that really does need to be worked out, whether it really is a threat or whether it is a true benefit to the individual.
Well, it's like you say, right? Like double-edged sword here. Even in our discussion just before we started, everything we were talking about was opportunity on one side, but the challenges on the other. And while we're talking about these challenges, at the same time, there's a rebuttal for each challenge to have an opportunity within it. And I think that's where this lies, right? I would love to actually touch up on something. We're talking about transition from Web 1 to sitting at Web 3 right now. You started off in gaming. How has this transitioned at all in your career in adoption into crypto? Do you find gaming and crypto to be quite overlapped?
I think that there's a natural overlap because crypto has kind of flipped the switch on what we consider for venture funding and what we consider as exits, right? Crypto is very, very speculative. It runs on narratives, right? Attention narratives. On one hand, if you're a startup and you're in crypto or you're related with crypto, there's always options for pre-selling NFTs or tokens to basically act as a fundraiser. And even going through something like Kickstarter and making your case there, it's not necessarily the case at all. Sometimes you can make a DeFi protocol, meaning like a kind of pool of DeFi funds, throw up a smart contract in 2 weeks. And if you have the right attention economy narrative towards that, suddenly you have, 200 million to TVL, like total locked value that people have put towards this for some kind of interest-bearing return that they're looking for, which is nuts at like 20-30%, right? Some crazy numbers. But because the way the capital moves so quickly in crypto related to the attention narrative, right? We are seeing like vast sums of money being moved around to various pockets, or where the money has been created nearly from thin air in terms of the value of it, right? It looks like it's thin air, but it's actually, basically contributing to this infrastructure that many of us still don't really have a handle on per se. And so for gaming itself, in an industry where if you're doing a AAA game, you're looking at 300 million US as a minimum. Now, if you can have a successful token launch, NFTs, and so on and so forth, you can fundraise, whatever, 30, 40 million per year going through these channels directly to individuals. And this kind of harks back to, what we were talking before with Laura as well, in terms of the use case for emerging markets in terms of direct access to capital, right? And that's what cryptocurrencies can do for businesses and for fundraising. But then again, there's a fine line when you're doing these fundraisings in terms of like, how are they considered securities? What is the real utility of it? And then this confusion whether or not is this a store of asset or is this a speculative asset, right? So we're still very much on the early stages, but in terms of, if you think about it, every single Web3 gaming company that does a token launch has done a reverse ICO, meaning that they're fundamentally public companies now operating and building in public. It's quite different. It's quite the new world. It is a lot of scams, but I'll say that a lot of those scams do get caught because all the transactions are all online, right? And they're fully trackable. The way to kind of, look at it is that, yes, there is a lot of funds that are moving around. The source of funds may be dubious, but at least attractable fully. You don't have to go through 10 different shell companies to figure out what's going on. You literally have to follow where the wallets are going. And this is also why the US government shut down the Tornado Cash. Tornado Cash was a Bitcoin mixer, and that would obfuscate where the funds were originally coming from. And they actually charged the individual for that. Basically, there's even a theory that Bitcoin was actually created by the NSA to track transactions actually. So we're in a very new space, but for fundraising and capital allocation, and when we talk about what money is, money fundamentally is the itemization of incentives. Think about it as if we removed all the money in the world, would we still have the table that we're sitting at? Would we still have the laptop? No, because we need a way to kind of create incentives in some kind of like measurable form. And cryptocurrency is basically hyper doing that. Unfortunately, our industry and what we call DeFi and stuff like that is very much, using a kind of a financial use case. What a lot of the people in crypto who are mostly under 30, they don't understand is the financial market is not the economy. The financial market is the market that sits upon an economy. And for most listed companies, they have 3 years of revenue to show that they qualify, that they have at least some revenue model or growth model. Whereas in cryptocurrency, all you need is narrative. So for all you individuals out there who are great storytellers, I have to say, this is your moment. So if you're good at making stories, get into the crypto.
Get in there. We've got lots of comments and questions coming in. So before I hop to that, from an investor perspective, very quickly, Laura, where do you see the trend going from an investment perspective, investment appetite? Sin Jin, you've touched on this and it seems it's quite robust. Especially where you're based, definitely so. But what about the Western world?
So last year, I think generally there was concern about investing in private startups just because prices had risen so much. From what I saw, people were waiting for prices to come down and just kind of waiting it out. I feel like there's a lot of cash actually around. Like if I'm thinking about Web3 and AI, the British Business Bank just backed a VC fund with 30 million. It's a seed fund for that very purpose. So there is a lot of interest. There is money around, and I think 2024 will be a good year to start investing. I think 2023 was a slower year. People had a bit of a wait and see, particularly if they had invested in 2021, 22, and I think 23, 24, 25 may be actually very good vintages for VCs, and prices have gone down and there's more information. Now, with the approval of the 11 ETFs, last week there was a 17.5 billion trading volume of crypto investment product, which is huge. And Ether is up 11% year to date because there's talk of an Ethereum ETF backed by the SEC. So I think with more regulation, with more information, with more security, I think that was a big problem with blockchain. I think that's still a problem actually. I don't think the security aspect of it has been dealt with. But as more of those problems are getting resolved or we're getting to resolutions, I think it's becoming a more interesting time to look into these as investments.
Mann, from your perspective, on the other side, on the fundraising side, what are your kind of feedback?
Mixed opinions, actually. You've got traditional investors who want to look for perhaps a crypto or a blockchain kind of tech business that is going to try to make things a bit more mainstream, so build the bridge. But then you've got some investment firms who are completely focused on Web3 and the future. So we get a mixed bag. Ironically, we sit right in the middle of both of those worlds. We want the old world, so to speak, to move forward and adopt this new technology very seamlessly, very easily. We have to build a circular economy around this new technology, as most big tech does. We do need to find that what is that bridge, and thankfully that's the sort of stuff that we're working on. We've adopted the future, but we want to bring it into the here and now, and that's exactly what we're trying to do on our side. So lots of interest. We are a startup, UK based, etc. So we're opening up our doors next round and all that kind of stuff, just so that we can continue in our goals, expectations over the next kind of 5-6 years as well.
I don't want to kind of zero in on this person, but Dakota Solomon, very active on chat over here. Do you mind coming on and just kind of introducing yourself to say what you do? Because you seem to be so much in the know of what's going on in this space. Again, I don't mean to highlight you, but if you're open to it, would love to actually have a word with you.
How are you guys? Well, I'm a teacher. I teach fashion at a preparatory high school. I became real savvy in this space maybe about like a year now. I'm with a group called BK Crypto, which provides a lot of information in regards to what's going on in the crypto world. So that's why I have a somewhat knowledge of it. I still need to dive deeper into it because what a lot of people don't understand, this is just the golden age. If you take a look at how money traveled throughout history, we are at the point where it's changing. The US dollars and all these other global currencies out here. This is a new form of ownership, of having independence, of being financially free, breaking all generational curses and all throughout. So this is really, really a big deal. This is for all the 99% to be the 1%, and the 1% are going to be the 99%. That's why you have BlackRock and Grayscale, these big corporations, how they're manipulating the market right now, because they're not going to buy in big. They're going to have it drop. So a lot of stuff is going on in the news. There's a lot of stuff that's happening. But I say this to say, like, where money was going throughout history, is always like 101 years or 84 years, and then it's over from salt, from gold.
You've kind of captured a lot of hesitation and reluctance on a investor's part. When you say crypto is it, other currencies are out, and it's this polarized view on crypto is what makes investors very reluctant in adopting this.
Yeah.
Sin Jin, what are your thoughts on this? Because kind of operated in this space in so many different continents now. Like, do you see this polarized view? You can't get rid of the currencies. They're both here to stay. So what is the best way to coexist?
Well, number one, if the US dollar goes, then all my US assets go to shit. So I hope not.
I hope not too.
I would like to, keep my place in Vermont. It'd be nice, and then pay my US taxes. What economic engine are we looking at for what cryptocurrencies represent? Because ultimately, it's the economic engine that moves the transactions, which we invest in, right, in a capitalist society to create further growth. The biggest benefit that cryptocurrencies have done is democratize this idea of liquidity. In traditional banking and finance, liquidity is controlled by regulation, which is controlled by bigger institutions who have an understanding of how the rails work, right? So whether it's a dark pool, whether it's wealth funds, whether it's sovereign wealth funds, right, or whether it's governments and their taxation, whatever regimes, right? They control the way that liquidity is presented, right? And by controlling the liquidity, actually, right, you're controlling trade. So what cryptocurrency has done in the very kind of most optimistic way of looking at it is this ability to suddenly drum up all this liquidity for trading and create a pool of liquidity that has a different level of accessibility that didn't exist before. So in that respect, right, I would say that where BlackRock and a lot of the US institutions now are saying this is a new asset class or this is a new pool, we're at the kind of precipice of whether or not are the old institutions going to control it. Now, if they control it, it'll be subservient to where almost fiat is backing this, and it's being used in a certain way, which still benefits the current institutions. But if individuals, just like what democracy is supposed to be, choose to use it for global governance type of projects, creating more accessibility or more equality in the global stage, right? Then we move this liquidity towards that, right? And so I think they coexist at the moment, but ultimately, again, what is incentive, right? What is, money? And there's a point where if the money is invested in something like AI, and that AI is invested into the, humanity, where, suddenly, we get rid of all genetic diseases because we find certain molecules because AI is able to do that. We fund that with, data centers that are able to crunch that. We get quantum computing, we get towards singularity. Then everything gets set up on these rails, and then money's value in terms of material wealth and so on and so forth kind of goes out the window. We almost get the Star Trek kind of situation where money and incentive is no longer going to be used for material wealth. Rather, it's going to be used for the progress of humanity. Now, that's the best case scenario. But in the meantime, we have BlackRock and we have myself who likes to make money and enjoys money and likes bathing in money and showering myself with gold coins, that I'm going to take the most advantage of the moment, right? But I think this is a transitional period where it can go either way. For myself, being in the casino industry, I know I'm going to hell to some degree. The mission or where this ends up, though, with something with, again, AI and quantum computing, will be so strong that it will be used for humanity, right? So, maybe one day, yes, cryptocurrencies will definitely supersede or supplant fiat currency, but we have to see. It's a really great vision for it. I don't think the U.S. government will agree with this vision at the moment, but maybe for the best of humanity, we become this real global village. And as long as I'm still bathing in my money, I think I'll be happy with whichever way it goes, whether it's digital money or with my virtual metaverse character or in real life. But I still love my US dollars.
Yes. I hear you on that one. I'm all about the US dollars on that part. Like I said, I'm also jumping on the crypto bandwagon now.
I wrote a paper a few years ago, probably about 4 years ago now, and it said, never mind fiat currencies, we're all going to Mars anyway, right? So fiat's not going to really work out there anyway, right? So
it's going to be social capital.
Exactly.
Elon's X on Mars X.
Mars X.
And how many likes and dislikes you get, and what algorithm you're willing to pay for
sure.
better billing.
There's a couple of questions, Gurna, Gurnam. But why don't you just come on camera, Gurnam, and ask the questions?
Yeah, sure. Happy to jump on. Thanks, Kari. Hi, everyone. A very informative session. Thank you very much. I guess really it's more from an end user perspective, right? So we're, those who are investing in various cryptocurrencies, perhaps some have gained. Through those gains, they may be looking to hold, or maybe some are looking to reinvest, or perhaps now say, well, look, I have gained, and the stocks and shares, I'd like to draw it out and spend it, because that's what you want to do, right? So I think from an end user perspective, what does all of this mean? What can I now do with my currencies? As you've all said, there's a lot of activity around cryptocurrencies, and it just still feels so far away from an end user perspective. So really, that's the question that I have.
So, Gurnam, thanks for the question. One of the things that we try to do is that if your cryptocurrency is held in an exchange, which is always recommended, you can have it either converted back into like a fiat currency that then is drawn down to your bank account, and then you've got your fiat currency, just as you would have a normal currency in your bank, and then you can pay for your goods and services, using your card or bank transfer or whatever it is, right? Some of the things that we've done on our platform is that if you've got an online business, e-commerce store or whatever, we present a new option so you can pay directly with your cryptocurrency. So that merchant ultimately has another option on their checkout page. So they'll have the Visa, MasterCard, Google Pay, Apple Pay, PayPal, whatever, Alipay, but then you'll have another third, fourth, fifth option, however many options there are nowadays, and it would just say pay with crypto. So that at that point you can directly pay with your wallet. If you're using something like MetaMask, which is a Web3 decentralized wallet, our systems can detect whether you've got MetaMask already installed on your browser. So your checkout experience is similar up to a certain point, but if you're already in the crypto space, you'll know that your user experience is slightly different because you do have to engage with your wallet system. But then that way you can actually pay for your goods and services directly from the crypto that you hold. So you don't have to convert it in advance. You can pay it directly. And then depending on the mechanism behind the scenes, like for the merchant or the business owner, they can either decide to keep the crypto if they wish to. If they were a believer in crypto, they can hold it if they wish to, or they can have it converted into fiat currency, as I was mentioning earlier. From a user perspective, anyone who's growing up kind of with this technology, as in the younger generation, already familiar with how to engage with wallets and cryptocurrency-based applications on their mobile phones or whatever, they're already familiar with this type of interaction. So what we've done is just brought that forward and presented it in the traditional e-commerce kind of experience, essentially. So from that perspective, those are the kind of things that we're trying to do, just bring that UI or the user experience and user interaction a bit more closer together with the current world that we live in when it comes to online shopping, et cetera, et cetera.
The life of a degen crypto trader is the life of a penny stock 24-hour narrative trader. So the degen traders that I know in crypto, and I use that term in a very enduring way, for 4 days. And what they'll have is they'll have their Reddit open, they'll have Telegram alpha groups open, right? And they'll be scanning X, Twitter, for certain narratives that are happening, right? And they will identify certain coins that are purely meme pump and dump coins. What they'll do is they'll think that, does this meme have a lot of traction? They'll go through their channels and see it manually. Some of them have aggregated this for keywords. And if they think that this possibly has traction, like the Pepe coin, and then the most famous one of all, Dogecoin or Shipcoin or something like this, they'll literally throw $2,000 into it with a market cap of like 30,000. They'll ping that they've done it. They're a notable trader, and people will pile in. And the value of when they buy these tokens is 0.000001 cents. I'm not fucking kidding when I'm saying that. Like literally, it's basically nothing. After 4 or 5 days, it goes viral with the narrative, and suddenly that 0.000001 cents is now 0.00001 cent, and they've gone up 10,000%. And if there's enough liquidity in the pool, now the pool is like, let's say 15 or 20 million. At that time, they may cash out, or they just may let it ride. But these degens will make about 50 of these bets a month of 2K each to hit it at one time. By the time that you see it on Reddit with your channels, where it has like about like 100 upvotes or 200 upvotes, you are the exit liquidity.
How much are they walking away with that?
Yeah, they can walk away with $4 or $5 million on a 2K investment.
Crazy.
Absolutely insanely crazy, but it's gambling times 100 in the sense that they have enough capital simply to throw it at certain things. But you may think it's completely nuts, but their analysis and their breadth of manually looking at where the narrative is going and where they have kind of understood where the attention economy is at is native. It's the same thing as I believe some of the people here are probably in the Z generation. And when you look at TikTok, you look at that as an authoritative source of this is where I should get my haircut or my hamburger eaten. I know that I may not look 48, but I am. I'm going to hit the big 50 in a year and a half or so, 49 this year. And I've had to kind of understand what I don't understand, which is this attention economy and how real it is because they've lived in this completely digital world. And so for them taking these bets are not simply bets that are completely random. They see a certain narrative that's there in place. Now, for you as a crypto trader or for you to put money in and out, you'll look at these trends. So the bigger trends are the macro trends are the blue chips like Bitcoin, Ethereum, and so on and so forth. But a very, common trend for those blue chips is you basically buy the news and you sell the event. So in this case with the Bitcoin ETF, would you have expected that the Bitcoin ETF would have raised the Bitcoin price or would have decreased it? For all the Bitcoin traders who are native to the space, they were ready to sell as soon as the ETF was approved because it was already priced in. So understanding where the narrative is and where it's already priced in is also very important because by the time you feel that this is very bullish news, that bullish news has already been in the market for about 3 months and it's already been priced in already. So at 46,000, that was basically the priced in price from where the news first appeared, which Bitcoin would have been at something like 37K. But you as a trader are only looking at it when it's about 43, going to 46, thinking it's going to go up further. In terms of trading in and out with your certain profits, right? If you look at it as a 24-hour market that's being traded on narratives, right? Unless you are willing to put in the same amount of time, right? You will always be left holding the bag. In this particular time, at a certain point in time, I had thought that this entire crypto madness of speculation was only just speculation, that we would move past this phase. I've come to understand that we almost have this penny stock perpetual phase here. Eventually, when crypto businesses are able to apply it in a real business model, other than exchanges and trading, then you'll see real value investing. God bless Warren Buffett, rest in peace, Charlie Munger. And then at that time, value investing and more traditional analysis will be more appropriate. For now, find your niece or nephew at the age of 23 who likes to go through all the Twitter and who literally posts 4 or 5 times a day and is on TikTok, and then you'll get an idea of what the narratives are going.
You've described my niece already, and she is of that age. You're absolutely right. She has found a way to take her gains and spend it, and she's living a great life. So I guess from a practical point, just to end my question, I'm sure there's other questions. Kari, if I want to when I want to renew my membership with Taz, I come to you and say I want to pay with crypto. That's activated, and I can pay using my cryptocurrency. Yeah?
Correct.
Great. Thank you.
Yes,
and that's
correct.
using Mann's technology, is it?
Yeah, is using QI Digital. Based on this, when we talk about this, one of my most naive and ignorant question was, well, if I take crypto money, what currency should it be in? What cryptocurrency should it be in, right? And because there's so many out there, Bitcoin, Ethereum, they're just priced out for normal people now. And I guess this question is for each one of you. If you were to buy something today, let's just take that example of these guys buying it at literally less than penny stock levels, right? What would be your recommendation? And capital is at risk. This is not financial advice, blah, blah, blah. Let me just put it all out there. Your personal opinion, what would you do?
I would take the meme coin that I made $40,000 on, and then I know the liquidity is dropping because it's dumping like crazy. Take out my profit, and I would convert that obviously to USDC or USDT, and I'd pay for that, and I'd be freeloading whatever membership I would get out of Atlantic. That's what I would do.
Okay, but wait, what currency was that?
USDC or USDT. USDT Tether is the international form of US dollar, was not accepted by institutions of any worth. USDC is backed by Goldman Sachs, which is like Gemini and so on and so forth. That's what they're going to accept, right? And which has a lot more KYC behind it. So the more nefarious internationals will be using USDT. And law-abiding, tax-paying U.S. residents like myself will be using USDC. But for you, I would send USDT because I live on the edge.
I am a law-abiding U.S. resident myself. I'll
leave it to convert the USDT then.
I'll find a way.
I can only speak from what the trends seem to be on our platform. And it goes without saying, the likes of Bitcoin and Ethereum, people still choose to pay with it. Bitcoin Core is probably a little bit slower to transact, especially for what the average transaction value in an online transaction nowadays is £100 or whatever. I don't think many people are transacting for £100 using Bitcoin. But there is what we call layer 2 type technology, which is Bitcoin Lightning. Probably not going to talk about it today. I'm conscious that, we don't have that much time today. But, to answer your question, Kari, it's not that there's thousands of cryptocurrencies. There's actually thousands and thousands of tokens that have been built on top of a blockchain like Ethereum. Now, most of them don't have any liquidity in them, so we don't tend to use them on our platform. So we only ever go for like the top, at any one time, the platform is probably the top 5 or 6 maybe cryptocurrencies that are used most widely. The stable coins are on there, and then the top performing kind of Bitcoin, Ethereum, and a handful of others. They're the ones that seem to be working well on the platform, and businesses seem to engage on those regularly. As a business owner, you have the complete freedom and choice to either keep that and just sit on it and do something else with it and pay it somewhere else maybe, or whatever. Hopefully that the second business you pay with will also be adopting our technology, or you have it converted into your local currency, and then it's transferred into your bank account.
Amazing.
I bought a few tokens when I was interested in participating in some DAOs, some tokenized VCs. So I have some very liquid tokens. This was a few years ago, maybe 3 years ago. I mean, I guess if I was to do a short-term trade, I'd buy Ether now, just because I do think that the SEC is going to approve an ETF, so as a short-term trade. But really, I think being more traditional, I'd invest in a company that was using blockchain or was using Web3 in a way with AI or quantum to create something of value. For me, it's a little too speculative.
It's interesting you would say that, because like that does fall into the continued greater speculative narrative. A lot of AI products will still be about 2 to 3 years away before they really hit the market. Gurnam, if I was to give you non-financial advice on what tokens are really good right now, are actually gaming tokens. They've been performing better than any other tokens. The reason why is because there's an actual product of a game. Now, if the game is fun, it creates transactions. And as everyone knows, gaming is recession-proof, provided that the game is fun. Casino revenues tend to go up when there's the start of a recession, and they keep going as people get more depressed and looking for a win to finance their company by going double or nothing on the red spin. But watch out for those double zeros; they will fuck you. But I would say absolutely what you want to look at is products that actually will generate revenue. And so far right now, the only products that are either centralized exchanges, decentralized exchanges, and gaming, not financial advice. But if you were to look at something like Shrap, Token, Prime, Echelon Prime, those are 2 leading gaming companies led by very well-funded groups, and they have been doing very well. But you have to also look at the unlocked supply. So whenever these projects happen, they have a certain supply that's locked in supply, and then they get vested. And for a lot of VCs, they're not in it for the long term. So a crypto VC or a token fund will look for probably about a 2 to 3 year maximum before they exit, unlike most VCs, which is 7 to 8 years, right? And they're only looking for a 2 to 3x. And once they have that, they dump the tokens. They have no further use of the token. So we have a SAFT called Simple Agreement for Tokens, which the SEC will probably come down with a massive hammer on, or the DOJ will start to do criminal charges with. Essentially, they're like securities, right? Companies that are token funds that are not real VCs, they're just looking for that 2 to 3x exit and then totally leave the space, right? Not financial advice, but if you're looking for something that does have more value and that can be pegged to something more fundamental, game-related tokens would be it. Not financial advice for the 10th time.
Yeah. How far do you think we are from having like an open trading platform for these tokens? Like having like a mutual fund of just tokens.
Open trading, we have that already with decentralized exchanges called DEXs like Uniswap, PancakeSwap, Something Swap. There's definitely that out. But in terms of mutual funds and so on and so forth, like I said before, in terms of Web3, I don't think it's going to be this transition where even Larry Fink is saying about like how all this is going to be online from what currently is in the traditional market. I think the real 10x will be totally native mutual funds, totally native financial instruments, totally native tokens that have their own revenue model that's completely online. That's my thesis.
But it's so difficult to now buy into these native ones, right?
Right now it is, but give it 2 to 3 years from now, and now with the regulatory approvals that have come through, you'll see a lot of investment. I guarantee you that BlackRock and KKR and everyone else is investing in infrastructure to make it a lot easier, using companies like Mann's company company and so on and so forth, which has payment rails that already have the conversion there or user adoption. So in time, but if you want to get in at the earliest stage, you will face all these obstacles that you have to, because the worth to be in early trumps that of convenience. You can't have it both ways. You can't have convenience and a good investment without taking the risk or the difficulty to onboard yourself. So that's just particularly the nature of it. I would look at it that the difficulties for onboarding now is still what kind of separates the mass market and the value hunters from the actual people who are getting the early adoption gains.
But see, that's it, right? Like, it's supposed to be the building block for that.
With the regulatory like gates being opened, I think people will, especially those ones who have more of a long-term view, will start to happen that way. We're on the track for it. We're still very, very early, but this is the cusp. But this is, I think, the time that if you're going to plunge, you should plunge now. If you feel this is an asset class that you want to engage in. What?
Define plunge.
Plunge is actually learning about the space, learning about what MetaMask is, learning about what CoinMarketCap is and what the narratives are and so on and so forth. Plunge does not mean taking, 300K of your family's trust money and sticking it in for all of your alternative investments. That's not what I mean at all. Getting to know the space, dabbling here and there, knowing what a DEX is. All these things will become much easier very, very soon. But before that happens, you'll have a leg up in terms of being somewhat of an expert in the space.
So you think that what you're saying in 2 to 3 years, a correction will happen in the market?
Not necessarily a correction. I would say that when you hit mass market, then the whole market itself will have 10x, but the individual gains will be moderate once again, 3%, 4% at most.
We've got a question here. As Web3 service provides that help projects with visibility, how do we position for opportunities? Services like graphics design, community management, content creation, and writing. What is your advice? And can this platform provide opportunities for persons interested?
The secret sauce here is whether or not can you craft a narrative, right? I can put together an entire team using just Freelancer or Fiverr right now and have a fully functioning, whatever, social media team and graphic artists and so on and so forth. That's not where the secret sauce is. The secret sauce is, can you craft a narrative that truly takes hold of the attention economy? Web 2 terms, we call this viral marketing or a viral hit, which was always very difficult. But in Web 3, going viral is very easy now because the nature that everyone who engages with you also has money to engage at the same time, right? And this is what Mans was saying before. So because the consumer now is also an investor of sorts, crafting the narrative which they feel that they can 10x or 100x on your Atlantic Society coin led by the beautiful Kari. This is going to, work out and it's going to make 100x for whatever reason because of all the builders and the founders, investors in space. How can these 100 people here right now cannot come together and make a DAO and hundreds of millions of dollars? And if people buy into that, then the social media has something to really craft around that narrative.
Raymond, with the volatility in crypto, how easy could the adoption grow over the years, and especially with replacing fiat?
Also, the challenges that comes with Web3 and the Web2 space is not decentralized. In Web3, you have complete control over your funds, and with more power comes with more responsibility. So that brings the security aspects in cryptocurrency. When you lose your private keys, you lose all your money, sadly. And security in this space is really, really critical issue to talk about. Here and there, you hear news of people losing their funds and their trust Web3 dies down. With these challenges that we have in Web3, how easy we get to a point whereby Web2 will be phased out and we don't have to depend on Web2 when it comes to finance.
We're getting there already. I mean, like services like Mans who are doing non-custodial wallets. If Goldman Sachs or Citibank launches a crypto wallet, but basically it's an internal wallet, which they're controlling everything like a central exchange, and they're getting insurance. Not that the insurance will cover more than 250K. We're getting to that point now too. And, crypto has done a lot of great things in terms of the first narrative for crypto was basically, fast transactions, right? So like 7 years ago, whatever, +5, T5, 5 days for your transactions, clear business days. Now they've gone to the same day. I don't think that would have happened unless, crypto had that narrative in the first place. We're going to get there, but I think from an investor point of view, by the time we get there, then it's just going to be another 3 to 5% asset class, which is funny to say because that's still a fucking lot of money for interest, right? It's not negative like back in EU like 5-10 years ago. But from an investor point of view, by the time that happens and, there is non-self-custody and we fully trust it, those gains as investors will no longer be asymmetrical as well. The pseudo conversations as an investor and as a consumer.
Sin Jin's right, but also I remember giving a talk quite a few years ago, and Sin Jin, do you remember the ledger, kind of almost like a USB size stick or whatever, and people were storing their cryptocurrency on actual hardware, right? So it's a small little USB size stick. And you talked about, Raymond, you mentioned about, if you lose your keys and things like that. Big tech, as always, technology evolves. You're going to have more almost like wearable technology, right? So you've got things like tokenization or retina scanning, fingerprint scanning, and things like that. So in the future, we're not talking immediately, maybe 5-10 years from now, the idea about losing your keys will no longer be a topic of concern, basically, that we are in that world now because we still are bridged to the world of Web 1 and 2 because we're using this kind of conventional technology. But as technology evolves, as it always does, there's going to be new types of nuanced products and services that will further kind of almost democratize your own technology and the way your finances and all that kind of stuff, right? So, and I'll give you a really quick analogy on that, right? If you look at the high street bank, a conventional bank, a lot of them are closing down now because not just but other fintechs have evolved into mobile banking, right? So they can do that on their devices. There's going to be an evolution of that even further, right? So even mobile banking over time will also evolve into a new type of model or a fintech model. So there is some work to be done, and there's not just like companies like ours, but there's other hardware developers and other software developers around the world who are really doing some ingenuity and innovation in this space. So then I think you're going to be going into kind of almost like an area of Web 4, maybe going into leaning into Web 5, where it's hyper connectivity in terms of internet speeds going through the roof. Sin Jin mentioned things like AI and quantum. When we're going into those realms, the whole technology landscape is going to look very, very different. So a lot to look forward to. And from an innovation perspective, is quite exciting.
Yeah, but Raymond, we don't need to worry about that as Laura is investing in AI, that eventually that AI will destroy us anyways, or, we're going to use our retinal scans in the Antichrist and the revelation is going to happen anyways. And we all, well, I won't go to heaven, but the rest of you will go to heaven. And so, I'll be here to bathe in my US dollars. So don't need to worry about that as I bow down to our AI master lords.
Many months ago when I met Mann, I told him, I was like, for Taz, I wanted to have our own NFT and really kind of have that membership organization, specifically an investment club in that space, in the Web3 space, because I haven't seen anything like it. Mann, you had graciously said you're going to build it, and I'm coming back to you for that.
Let's talk after this call.
I think it could just be really, really cool if we were to actually, because like 2024, I see this as an opportunity. Like I keep saying this, but for us, I think it's an opportunity to delve into this space. I, for years, have been very focused on very CapEx heavy, manufacturing sort of investments. And then, about 6 years ago, I was like, okay, I'm going to dabble into VC more angel investing. And that was kind of like, oh my God, moment for me. And now 2024 is going to be a crypto moment. So I'm all hands in. I'm all hands on deck now.
If I had put my net worth at that time back in 2016 into crypto, that would have outsized all the gains that I had made from every other type of investment times 5, literally doing nothing.
Yeah.
Right. So the outsized gains here are not just asymmetrical, they're almost normal in the sense that 2020, we had something called a DeFi summer. The DeFi summer was when all these DeFi protocols came onto being. And I have this one VC friend of mine who has made and lost a fortune 3 times. In the DeFi summer, he had 7,000 US. True story. He aped into everything. That's a term that we called aped in. And at the end of the DeFi summer, after a month and a half in August to mid-September, he walked away with 90 million US. And because that was the third time he had lost his money, this time he actually kept it. Now, where in the world in the history of mankind could many individuals take 7,000 US and turn it into 90 million? It's almost mathematically impossible. But the reason why is because
he knew what he was doing.
That's debatable. Yes, in some ways.
He would have learned what not to do, what to do. Mathematically, how is that possible?
Crypto goes to the 16th decimal point. And if you were to invest into something that was 0.000001, and then 3 days later, the market cap for that liquidity pool went from 10,000 US to 40 million US. That's how. And that happened every 3 to 4 days with a new protocol during 2020.
So he was compounding that.
Yeah, to like literally like an orthogonal number, right? Not even exponential. And the reason for that was because he literally took the gains from here and from 7,000 to, let's say, like literally 100,000, and then 100,000 completely into 3 other projects. And one of those projects hit, and then it was like 500,000, and then from 500,000. And this happened all in a matter of a month and a half. But his story is not unique.
Actually, truly scary.
It is truly scary. But the other thing, though, too, is it is limited to individuals who are so native to the space. That's all they have. None of us here, I'm assuming, would take their entire net worth and stick it into something of a gamble, even if we had a good sense of it, because it's just not responsible.
If my net worth was 7,000, I take that chance.
If your net worth was 7,000 and you took that chance, you are a woman who surprises me very much so.
If I only had 7,000 to my name, I'd take that chance.
Yeah, you would. If it was almost like this reoccurring lottery that you had 3 chances in, and you understood the narrative and you were there early enough with enough information. But that information itself is very asymmetrical as well, right? It's those who craft the narrative who understand the narrative. And so the reality is, for 99% of the market, they are the retail that gets dumped on. So rather than, the bigger institutions dumping on you afterwards, right after a post ICO and you're like the third round in. But these individuals, because they think there's another chance around the bend, they're willing to do that, right? And this is the interesting thing about crypto and where we're headed right now for Web3 is that, being a child of born in the 70s and going through the 80s and the 90s, right? We were still talking in my MBA course about lifetime employment, whether or not there would be or not. And now that's ridiculous because now everyone even puts like 3 months on their resume that they worked for this and they were the growth hacker of this and that. Crypto has expanded the opportunities that there is a life-changing investment opportunity, quote unquote, possibly literally every 3 days. Whereas these things would have been every 3 or 4 months at best. And you would have had to go through a broker, or you would have to have an inside allotment for an ICO, which would still need to be underwritten and still need an 8-month process to go through. That's been truncated to 3 days with no rails. So when you look at Gary Gensler of the SEC, he understands that. And he understands the majority of the population will never have the knowledge. They'll never be there early enough to benefit of that. And they will simply be exit liquidity. But for those who are completely native to the space, it's like a fish to water. They're willing to take that bet. We would pick the wrong bet and we would be zeroed out on the second day.
Like you say, you have to be a native. I bought some currencies, again, I think it must have been 2019, but I had no idea I should have bought them on a wallet. So I bought them on exchanges. I can't even remember where, what, how, lost stuff. And I was kind of just betting uninformed, and that's just not the way to do it.
But that goes regardless of any sector, anything you trade, you wouldn't go uninformed in it, right?
I had people like message me on LinkedIn, and they said, I represent 40 Russian investors before all the sanctions and everything like that. We would like to work with you because we think you can make a great narrative because of your background, and we know you're in crypto, and we can guarantee that we can pump your token through our alpha groups by 600% in like less than a day. Are you interested in working with us? And I said, thanks, but no thanks. I like Russian people, but it's not my kind of bag. I like to kind of build in the space. But this is very much true where, the information is very much gated, right? And by the time that you see that something has gone up 10,000%, it's very much that you are now being enticed so you could be the exit liquidity for these individuals. Right.
Very cool.
So it's very interesting because you look at all these gains that people have made in crypto with ICOs and stuff like that, and you say, these people are idiots. I should be able to make this money. But unfortunately, the playground that they play in is not your playground. That's their money to make. Right? Because we really have no rights to get that money because we're not native to the space in the way they are. The amount of information that they process in a very short period of time is unbelievable. When you see a crypto trader's desktop, they literally have 20 windows open at all times. They have alerts on all these different things, right? They have their friends pinging them to check out this, and they literally are glued to their monitors 24/7 more than any hardcore Web2 trader will ever be, Forex or otherwise.
No wonder they're 30 and under.
Exactly. They drink a lot more Red Bull than I do.
I'm on a lot of Discord chats and I can't actually understand the language that they speak. So it's not even once you get to play in their playground, you can't understand what they're saying.
Yep. And then you got to pull the trigger on it. And if you don't pull the trigger on that day, that's already up like 6,000% or 60,000%, and you're already out.
Just to bring it all back, I mean, Web3 is about decentralization, blockchain, token-based economics. I mean, it's broader than just cryptocurrencies.
That's right. So, Gurnim, this is all your fault for getting onto this degen investment triad.
Kept it going, didn't it? I mean, look at how much discussion took place. It was very informative, so thank you.
Speaking of, We've actually maxed out our 90 minutes. It's just like literally flown by. And I was thinking, I was like, crypto, I don't know if people would be like interested, not interested, but it's been phenomenal. I can't thank you guys enough. Like, genuinely, this has been so insightful, informative, but it's kind of also made me a little excited about like the space a little bit.
Oh, the FOMO's now kicked in. She's a crypto addict now. We'll be calling her crypto queen next week.
I'll take all of my 7,000 and do something with it.
But to give you an example, as a Web3 founder in the crypto space, at one point I was on 8 hours a day on Twitter Spaces speaking as someone who's managing my own studio, being the lead game designer, doing dev, as well as all the administrative work as, a founder of a small studio, to stay relevant, right? And so the time that's required here to craft the narrative, maintain your community, communicate with all these different groups, right? It is inhumanly possible. But because these individuals are so native, it's not a task for them. But for someone who is 48, who thinks that Facebook is somewhat optional and social media is optional, right? It was a huge learning curve for me to break into that paradigm. That will be for each and every one of us here, except for maybe the younger individuals here who actually have a massive advantage here. Because when you're native to this space and you're 23 years old, but that's all you've known, the opportunities pop out to you in a very obvious way. This is what I need to look for. This is where I'm missing the information. For the rest of us, who I'm probably a Generation X, we are totally flat-footed here. But, the time will come when we have to do value investing, when we are able to look at the business models that are actually going to work. And in that case, being early in that way, there are still 30 to 40% gains that are still available. For traditional, of course, that is, 8, 10x. For what we're used to. You might not get the 10,000, 7K to 90 million, but doubling your net worth, not financial advice, within 3 years in crypto is still very, very possible in the next 3 to 5 years, if you're well positioned for it.
And that is what you're saying a non-native can do.
Yes. If you are to start to engage right now and understand the paradigm. Right. And I think those are still phenomenal gains, doubling your net worth, although I would not be able to because my wife would spend it all. Before we got there, but that's the price of being Korean and marrying Korean. So,
I gotta thank Deborah for a great suggestion and also bringing you to the table here. So thanks, Deb. But she suggested that we should have a follow-up conversation on this. For me, I know I've got a few things to do, a few steps to take, but I'd love to actually keep you guys posted on what I'm doing.
Fantastic. I look forward to everyone having monkey JPEGs the next time and changing all our names to Crypto Queen, Crypto Emperor, Crypto Mac Daddy for the next term. I will change mine as well to the Oyoboon of crypto when we jump on next time, and I'll have a virtual VR tuber in my place.
Thank you so much. It's been really very enjoyable.
Thanks, everyone.
Thank you, everyone. Cheers.
Thanks.
Bye-bye.
Bye-bye.
Have a good night.